For all of your lifetime and those before you, home ownership has been heavily marketed as a key component of the American dream. This societal pressure can push people into buying homes when it might not be the best financial decision for them. Among other reasons, the perspective of home ownership as a potential scam in the USA has been created, but rooted in aggressive marketing, financial institution practices, hidden costs, economic policies, and systemic inequities. Besides all that, purchasing a home remains one of the most significant financial decisions one would ever make. It's not just about finding a place you love, it's about navigating a complex process and ensuring you're fully prepared. Whether you're a first-time buyer or someone wishing to refresh your knowledge, you've come to the right place. In this video, I'll walk you through the entire journey of buying a home in America. From evaluating your finances and getting pre-approved for a mortgage, to making an offer and sealing the deal. We'll cover it all. We'll break down each segment into easy-to-follow segments, so you can feel confident and informed every step of the way. If you are saving for your first home or planning to become a homeowner shortly, I've got something just for you at the end of this video, so be sure to stick around till the very end. I will be sharing details about some amazing first-time home buyer programs and incentives that can really make a difference for you. Plus, I'll also provide some valuable professional advice and insights into current market trends. Ready to discover the secrets of purchasing your dream home? Let's begin and the thing unfolds. I just want to welcome you back to yet another captivating story of the world around us. This one will guide you through the journey of becoming a homeowner in the United States. Feel free to share it with friends and family who you know are in the process or about to embark on such a journey, because it will be very helpful. If you haven't subscribed to the channel already, go ahead and hit that subscribe button and turn on your post notifications by clicking the bell so you never miss out on any of our future stories. Let's kick things off by laying the groundwork for your journey to home ownership. It's crucial to understand where you stand financially before taking this big step. We'll delve into three important areas: your credit score, savings, and debt-to-income ratio. First on the list is your credit score. Your credit score is like a financial report card that tells lenders how trustworthy you are when it comes to borrowing money. When you apply for a mortgage, your credit score plays a big part in determining whether you'll get approved and what interest rate you'll get. Having a higher credit score can mean savings on your mortgage, potentially adding up to thousands of dollars over the life of your loan. Credit scores range from 300 to 850. A score above 700 is considered pretty good, but anything above 750 is excellent. If your score is below 620, you might find it tough to snag a mortgage at a good rate. To peek at your score, you can use free resources like Credit Karma or get a free report once a year from annualcreditreport.com. If you want to boost your score, start by paying your bills on time, reducing your debt, and steering clear of opening new credit accounts right before you apply for a mortgage. Next, let's talk about savings. When buying a home, you will need to have enough savings for down payment, closing costs, and an emergency fund. The down payment is usually the largest upfront cost. While some loans require as little as 3% down, aiming for 20% can help you avoid private mortgage insurance, PMI, and lower your monthly payments. Closing costs, which includes fees for things like inspections, title insurance, and attorney services, typically range from 2% to 5% of the loan amount. And don't forget about your emergency fund. It's wise to have 3 to 6 months worth of living expenses saved up. This caution helps you handle unexpected expenses without compromising your financial stability. Third, let's discuss your debt-to-income ratio, or DTI. This ratio compares your monthly debt payments to your monthly gross income and helps lenders to determine your ability to manage monthly payments and repay the loan. To calculate your DTI, add up all your monthly debt payments like car loans, student loans, and credit card payments. Then, divide this number by your gross monthly income. Multiply the result by 100 to get your DTI percentage. It won't be confusing after this example. Let's say you pay $1,500 in debt each month and your gross income is $5,000. Your DTI would be 30%. Lenders typically prefer a DTI of 36% or lower, but some may approve loans with DTIs of up to 43%. Now, those steps should help you assess your financial situation. If it is not looking good, you know what you need to do to make things right, because I just told you. If it is looking good for you so far, meaning you have ensured a solid credit score, adequate savings, and a manageable debt-to-income ratio, then you are in a strong position to move forward in the home buying process. Now that you have assessed your financial situation, it is time to determine your budget. This step involves getting pre-approved for a mortgage and creating a monthly budget. Let's break it down. First up, pre-approval. Securing a mortgage pre-approval is a game changer when you're about to buy a home. This process involves a lender delving into your financial details and giving you the green light for a specific loan amount, which sets you up for success in your home buying process. Why does it matter? Well, for starters, it paints a clear picture of your home buying budget. Plus, it signals to sellers that you mean business and you have the financial backing to make a serious offer, which can really boost your position in a competitive market. To get pre-approved, gather up those financial documents. Think pay stubs, tax returns, and bank statements, and hand them over to your lender. They'll take a close look at your credit score, income date, and assets. If everything aligns, you'll score a snazzy pre-approval letter stating the loan amount you qualify for. Keep in mind though, that while this letter isn't a 100% guarantee, it's a major sign of your buying power. Next, let's talk about creating your monthly budget. This step is all about understanding your monthly expenses and ensuring you can comfortably afford your mortgage payments along with other financial obligations. Let's start by taking a look at your monthly income and all your expenses, big and small. This means not just your mortgage payment, but also property taxes, homeowners insurance, utilities, maintenance, and any other regular bills like groceries, transportation, and entertainment. As a general rule, your housing expenses shouldn't go over 28% of your gross monthly income, and your total debt payments, including your mortgage, shouldn't exceed 36%. This approach ensures you will have enough room in your budget for savings and unexpected expenses. Be real about your lifestyle and spending habits. Consider potential increases in property taxes and utility costs. It's also wise to set aside some buffer for savings and emergency funds. By getting pre-approved and creating a detailed monthly budget, you'll have a clear understanding of how much of a home you can afford and to be better prepared to manage your finances once you become a homeowner. Next, We will explore the different types of mortgages and how to choose the right one for you. Just keep watching. Now that you have a clear budget in mind, it is time to research and choose the right mortgage for your needs. This step involves understanding the different types of mortgages and comparing interest rates and loan terms. Let's dive in. First, let's briefly talk about various types of mortgages available. Choosing the right mortgage can make a big difference in your financial journey as a homeowner. There are several common types of mortgages. 1. Fixed rate mortgage. Lock in a stable interest rate for the entire loan term and enjoy consistent monthly payments. Second, adjustable rate mortgage or ARM. Start with a lower interest rate, but keep in mind that your monthly payments could change as the market fluctuates. Third, FHA loan. Perfect for first-time home buyers or those with lower credit scores, offering lower down payments and flexible credit requirements. 4. VA loan. Exclusive to veterans and active duty service members. These loans often require no down payment and come with favorable terms. 5. USDA loan. Ideal for rural and suburban home buyers who meet income requirements, offering zero down payment options. 6. Jumbo loan. If you are eyeing a high-end home, a jumbo loan could be the right choice, although it may come with higher rates and stricter requirements. Next, let's discuss how to compare interest rates and choose the right loan term. The interest rate on your mortgage significantly impacts your monthly payment and the total amount you will pay over the life of the loan. Interest rates can vary widely based on your credit score, the type of loan, and the lender. It's essential to shop around and compare rates from different lenders. Even a small difference in interest rates can save you thousands of dollars over the term of your loan. When selecting a mortgage, it is important to consider the loan term and the interest rates. The two most common loan terms are 15-year and 30-year mortgages. A 15-year mortgage typically comes with lower interest rates, which means you will save money on interest over the life of the loan. However, this also translates to higher monthly payments. On the other hand, a 30-year mortgage offers lower monthly payments, making it more affordable on a month-to-month basis. The downside is that you'll end up paying more in interest over the life of the loan. When deciding on a loan term, consider your financial goals and budget. If you can afford higher monthly payments and want to save on interest, a 15-year mortgage might be the best choice. If you prefer lower monthly payments and more financial flexibility, a 30-year mortgage could be a better fit. Finding the perfect mortgage is key to unlocking your dream home. With various mortgage types and interest rates to compare, it's essential to do your homework and align your choices with your financial goals. Once you've found the right mortgage, the exciting journey of hiring a real estate agent and embarking on your house hunt begins. If you like this video so far or our content in general, go ahead and like, share, and leave a comment. But most importantly, join our growing community by subscribing and turning on your post notifications so that you don't miss out on our future uploads. Once you have sorted out your mortgage options, the next step is to bring a real estate agent on board. A trustworthy real estate agent can streamline the home buying process and make it more manageable. They come armed with expertise, local knowledge, and negotiation skills, all geared towards securing the best deal on your new home. A great agent can truly be your most valuable asset in this journey. Let's dive into the process of finding a reliable agent and uncover what they bring to the table. Start by asking for recommendations from friends, family, or colleagues who have recently bought or sold a home. Personal referrals are often the best way to find trustworthy agents. Next, do some online research. Look for agents with positive reviews on sites like Zillow, Realtor.com, and Google. Pay attention to their experience, areas of expertise, and how responsive they are to client feedback. Interview at least 3 agents before making a decision. Ask them about their experience, how well they know the local market, and their communication style. A good agent should be knowledgeable, approachable, and willing to answer all your questions. Finally, check their credentials. Make sure they are licensed and look for any additional certifications or specializations that might be relevant to your needs, such as Certified Residential Specialist, CRS, or Accredited Buyer's Representative, ABR. So, what exactly does a real estate agent do, and how can they help you? A real estate agent is a licensed professional who represents buyers or sellers in real estate transactions. Here's how they can assist you in your home buying journey. First, they'll help you find homes that match your criteria based on your budget, needs, and preferences. They will search the market and provide you with a list of potential homes. Next, they will arrange and accompany you on property viewings, helping you assess each home's pros and cons. They can also provide valuable insights into the neighborhood, local amenities, and market conditions. When you find a home you like, your agent will assist you in making a competitive offer. They'll help you determine a fair offer price based on comparable sales in the area and negotiate with the seller on your behalf. Once your offer is accepted, your agent will guide you through the closing process. This includes coordinating inspections, appraisals, and other contingencies, as well as handling paperwork and communication with the seller's agent, lenders, and attorneys. A good agent is also a valuable resource for recommending other professionals you might need, such as home inspectors, contractors, and mortgage brokers. Ready to move on? Now that you have a real estate agent by your side, it's time for the exciting part: house hunting. This step involves identifying your needs and wants and visiting homes while understanding the market conditions. Let's get started. The first step in house hunting is to make a list of your needs and wants. This will help you stay focused and prioritize what's most important to you. Start by identifying must-haves. These are non-negotiables. Think about the number of bedrooms and bathrooms you need, the type of home, whether it's a single family, a condo, or a townhouse, but also the location. Consider proximity to work, schools, public transportation, and other essential amenities. Next, make a list of nice-to-haves. These are features you would love to have, but can live without if necessary. This might include a spacious backyard, a home office, a finished basement, or specific design elements like a modern kitchen or hardwood floors. Remember, it's unlikely you will find a home that checks every single box, so it's important to differentiate between what you need and what you want. This will help you make informed decisions and avoid getting overwhelmed during your search. Now that you've got your list, it's time to start visiting homes. Seeing a property in person can give you a much better sense of its space, layout, and condition than photos or descriptions online. During home visits, take note of the overall condition of the property. Check for signs, wear and tear, and ask about the recent renovations or repairs. Pay attention to the neighborhood as well. Visit at different times of the day to get a feel for the area's noise levels, traffic, and general vibe. In addition to visiting homes, it's crucial to understand the current market conditions. Your real estate agent can provide you with market reports and insights on trends in the area you are interested in. This includes information on how long homes are staying on the market, the average selling prices, and any seasonal variations. Understanding the market helps you make competitive offers and recognize good deals when you see them. It also prepares you for possible bidding wars in hot markets and helps you set realistic expectations. House hunting can be both exciting and overwhelming, but staying organized and informed, as explained so far in this video, will help you navigate the process more smoothly. Be patient and keep an open mind. You might find that your perfect home looks a little different than you originally imagined. Up next, we'll discuss making an offer and negotiating terms. Stay tuned. Now that you have found a home you love, it is time to make an offer. Yeah. This step involves determining a competitive offer price and understanding the role of contingencies and the negotiation process. Let me break it down for you. The first step in making an offer is determining a competitive offer price. This is where your real estate agent's expertise becomes invaluable. Your agent will perform a comparative market analysis, CMA, to help you understand the fair market value of the home. This involves looking at recent sales of similar properties in the same area, also known as comps. Factors such as location, size, condition, and amenities determine a reasonable offer price. While you might be tempted to offer the asking price or lower in competitive markets, it may be necessary to offer above the asking price to stand out. Consider the market conditions, how long the home has been on the market, and whether there are multiple offers. It's important to balance competitive offer with staying within your budget. Remember to account for closing costs, potential repairs, and future expenses when deciding on your offer price. Next, let's talk about contingencies and the negotiation process. Contingencies are conditions that must be met for the sale to proceed. They protect you as a buyer and give you an opportunity to back out of the deal if something goes wrong. Common contingencies in a real estate transaction include the following. First, home inspection contingency. This contingency allows you to have the home professionally inspected. If any issues are found, you can negotiate with the seller for repairs or a reduction in price. Second, financing contingency. This contingency ensures that you can secure a mortgage if for any reason your loan falls through. This contingency allows you to back out of the deal. Third, appraisal contingency. This contingency protects you if the home appraises for less than the offer price. It provides you with the option to renegotiate the terms of the purchase or even cancel the contract. Fourth, sale of current home contingency. This contingency applies if you need to sell your current home before being able to purchase a new one. Negotiation is a key part of the offer process. Your agent will help you craft an offer that is appealing to the seller while protecting your interests. Be prepared to negotiate on price, closing date, and which appliances or fixtures are included in the sale. It's crucial to go through the report with your real estate agent and focus on the most pressing repairs. Uncovering major issues during a home inspection provides you with various choices to explore, such as 1. Request repairs. You can ask the seller to take care of the necessary repairs before closing. 2nd, negotiate a price reduction. Request a lower sale price to offset the cost of the repairs. 3rd, request a credit. Ask for a credit at a closing, which you can use to handle the repairs after you've moved in. 4th, walk away. If the problems are significant and you and the seller cannot come to an agreement, you have the option to walk away from the deal, protected by your inspection contingency. When renegotiating based on the inspection report, it is important to be reasonable and focused on the most critical issues. Your real estate agent can help you craft a clear and fair request for repairs or adjustments. A home inspection is a vital step to ensure you are making a sound investment. By hiring a qualified inspector and using the inspection report to address any issues, you can proceed with confidence. Before you continue, I just want to thank you for watching, and I hope you find this video to be valuable. That being said, let's go back to it. You are now ready to secure financing for your new home. This step involves submitting your loan application, going through the appraisal process, and ultimately getting your loan approved. Let's break it down. The first step in securing financing is completing your loan application. This process can seem daunting, but the right preparation, as we have seen to this point of the video, it can go smoothly. Your loan application, often referred to as a uniform residential loan application, requires detailed information about your financial situation, including personal information such as your name, address, social security number, and employment history. Financial information including your income, assets, debts, and credit obligations. Property information refers to details about the home you are purchasing, such as the purchase price and the property type. To make sure your application goes smoothly, make sure to gather all the necessary documents in advance. This usually includes recent pay stubs, tax returns, bank statements, and any other documentation of other source of income or assets. Your lender will use this information to evaluate your creditworthiness and decide how much they can lend you. After submitting your loan application, the next step is appraisal process. An appraisal is an independent assessment of the home's market value conducted by a licensed appraiser. The appraiser will visit the property to evaluate its condition, location, and features, and compare it to similar homes that have recently sold in the area. The goal is to determine if the agreed upon purchase price is fair and supported by the market value. The appraisal report is crucial for the lender as it provides assurance that the property is worth the loan amount. If the appraisal comes in at or above the purchase price, the financing process can proceed smoothly. If it comes in lower, you may need to renegotiate the price with the seller or come up with additional funds to cover the difference. Once the appraisal is complete and any necessary adjustments have been made, the final step is loan approval. Your lender will review all the documentation and the appraisal report to make a final decision. If everything checks out, you receive a clear to close notification, meaning the lender is ready to proceed with the loan. At this point, you'll receive a closing disclosure, CD, which outlines the financial terms and costs of the loan. Review this document carefully and make sure all the details match your expectations and the agreed upon terms. Securing financing can be a complex process, but understanding each step and being well prepared can make it much easier. By submitting a thorough loan application, a successful appraisal, and getting your loan approved. After that, you are one step closer owning your new home. You've made it to the final step, closing the deal. This step involves completing a title search, obtaining homeowners insurance, understanding closing costs, and doing a final walkthrough. Let me explain. First, let's talk about the title search. A title search is a crucial step to ensure that the property you're buying has a clear title. It also means there are no legal claims, liens, or disputes over the ownership of the property. A title company or attorney will conduct the title search to verify the property's history and confirm the seller has the legal right to transfer ownership. They will look for any issues like unpaid taxes, outstanding mortgages, or easements that could affect your ownership. If any issues are found, they will need to be resolved before closing. Once the title is clear, you will receive the insurance which protects you and your lender against future claims or disputes over the property. Next, let's talk about homeowners insurance. This insurance protects your home and personal property against damage or loss from events like fire, theft, or natural disasters. Most lenders require you to have homeowners insurance in place before they approve your loan. Shop around for the best coverage rates and make sure your policy is in effect on or before the closing date. Having adequate insurance gives you peace of mind, knowing your investment is protected. As you approach closing day, it's important to understand the closing costs involved. These are fees associated with finalizing your mortgage and transferring ownership of the property. Closing costs typically include loan original fees. These are fees charged by the lender for the processing of the loan. Title insurance and search fees. These fees pertain to the title search and insurance policy. Appraisal fees. These fees are for the home appraisal conducted early in the process. Home inspection fees. Just as the taste sounds, these fees are for the home inspection. Attorney or escrow fees. These fees are for legal or escrow services. Prepaid costs. These may include property taxes, homeowners insurance, and interest. You receive a closing disclosure (CD) at least 3 days before closing, which outlines all the financial costs and terms of your loan. Review this document carefully to ensure everything is accurate and there are no surprises. Before you head to the closing table, it is time for a final walkthrough of the property. This is your last chance to make sure the home is in the agreed upon condition and any negotiated repairs have been completed. During the walkthrough, check that all appliances are working, there is no new damage, and the seller has removed all their belongings. If you find any issues, address them with your real estate agent immediately so they can be resolved before closing. On closing day, you will meet with your lender, real estate agent, and closing agent to sign the final documents. Bring a government-issued ID, a cashier's check or proof of wire transfer for your closing assets, and any other required documentation. Once everything is signed and the funds are transferred, you will receive the keys to your new home. Closing the deal is the final step in your home buying journey. By completing a title search, obtaining homeowners insurance, understanding closing costs, and doing a final walkthrough, you'll ensure a smooth and successful closing. Congratulations on becoming a homeowner. In today's introduction, I promised to offer first-time buyers a special treat towards the end of the video, and I want to revisit that promise before we wrap it up. Let's talk about some valuable programs and incentives that can make your home buying journey a bit easier, especially if you are a first-time buyer. There are various programs designed to help you with down payments, closing costs, and more. Here's what you need to know. Many federal, state, and local programs offer assistance to first-time home buyers. Here are a few common ones. Number 1, FHA loans. These are backed by the Federal Housing Administration and are designed to help first-time buyers and those with lower credit scores and smaller down payments. They typically require a down payment of as little as 3.5% of the purchase price. Second, VA loans. These are put in place to help veterans, active duty service members, and certain eligible spouses. If you are a veteran looking to buy your first home, then VA loans can help you significantly since they are backed by the US Department of Veterans Affairs. Unlike FHA loans, VA loans often require no down payment and offer competitive interest rates. USDA loans. These loans are offered by the US Department of Agriculture. They are intended for first-time buyers and individuals living in rural or suburban areas. Similar to VA loans, USDA loans often require no down payment and are designed for low to moderate income buyers. Fourth, first-time home buyer grants and loans. Many states in America and local governments offer grants or loans to help with down payments or closing costs. If you're a first-time buyer, I recommend that you check with your state housing finance agency or local municipality for available programs. Fifth, home buyer education courses. Some programs require or recommend completing a home buyer education course. These courses provide valuable information to first-time buyers on the buying process and may qualify you for special incentives or lower interest rates. To find the best program for you, begin by researching options in your area or state and ask your real estate agent or lender for recommendations. They can assist you in navigating these programs and determining which ones you might qualify for. As you move forward with buying a home, consulting with professionals and staying informed about market trends can greatly enhance your experience. And you just learned why that matters. Thanks for joining me on this comprehensive guide to buying a home in the US. I hope this guide has been helpful and informative. If you have any questions or need further assistance, feel free to reach out to professionals in your area. Take advantage of the comment section and remember to reach out to those in your circle who have bought a house. Good luck and happy house hunting. If you are in the UK, I highly recommend the next video, which provides relevant information about the entire UK property market and answers many related questions. You can also watch our most recent episode that explores Brexit and answers the most obvious question: has Brexit done more harm than good?